Are investors starting to position for a Trump win? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Mish Schneider, Chief Strategist for MarketGauge.com. Hi, Mish. It's great to have you back on.
Oh, it's so great to be with you, especially at the end of this week. It was quite the wild week.
Yeah, it was wild. It was busy for everyone. We were just talking. I'm sure everyone listening feels the same. If you're already in the weekend, good for you. We're soon to join you, and we hope you're
We're
enjoying
right
it already.
behind you.
Yeah, we're right behind you, foaming at the mouth. But listen, I mean, Friday ended with, some gains and looking pretty good for U.S. markets. We saw stocks, little mixed in the beginning. NASDAQ was kind of the pace car, but they all pulled up and eked into the green. Not the Russell, though. The Russell lagging a little bit, but Netflix, stronger than expected earnings, certainly helping. But I'm starting to hear a lot of people, Mish, say that maybe the market's also really starting to price in a win for Donald Trump. Does it feel that way to you? How are you preparing for this upcoming election when you're thinking about your trades?
Well, you know what's the most interesting thing about this week, Maggie, is that if you look at the weekly charts of the sectors that I watch, and I'll get back to the election thing, but I just wanted to give some context here before I answer that question because it'll be helpful. If you look at the retail sector, my modern family, basically, XRT, IWM, the Russell, IYT Transportation, IBB Biotechnology, SMH Semiconductors, KRE Regional Banks, and we can throw in even Bitcoin there for good measure as my newest member. They really, even though they seem like they were so strong, and they were relative to where they've been, all they've done really now, except for SMH, but all of them, well, I shouldn't say just SMH, IBB hasn't done much, but apart from those two, all they've really done is touch the top of a trading range that goes back now, particularly if we look at retail, 10 months. It's extraordinary. So it's essentially what we see happen so often in the market where you get to the bottom of a range and all the bears come out anticipating that that range is going to break and it's going to go much lower. And now we have all the bulls coming out thinking that the range is going to break out to the upside. And yet, if you really just look at it, it hasn't broken yet. And I think that's really important to remember as we go into the next 2 weeks before the election. So where does the potential Trump win come into it? I remember the last time when Trump won, overnight, the market crashed like 1,000 points. And then the next day it opened up unchanged. And 2017 was one of the greatest bull runs we've had, like easy market. So I don't know if we can necessarily, say for sure that Trump is going to win. I know the polls are looking like that and the market's certainly feeling like that. Number one, but number two is we don't really know what's going to happen. It could be just the opposite. It could be running in anticipation of less restrictions, lower taxes, lower corporate tax rate. But he's also talked things that could really hurt the market through inflation, like much higher tariffs, threatening BRICS countries that if they don't use the U.S. dollar, he's going to put sanctions on him, kind of thinking that maybe he's going to be able to solve the Middle East conflict. And none of those things could happen, or all those things could have negative implication. So I don't like to think like that. To me, I just really like to focus on what I see as the trends because they make sense, because they've been developing for years or they're in infancy and they're starting to develop. And clearly, we've had those growth stocks do what they needed to do and they can take a rest. And if this is going to be the economic modern family's turn, we could say it's because of Trump, but it doesn't necessarily have to be deemed so.
Yeah. No, listen, it's smart because you're right. It's very hard to game this out. And because there's a sense that maybe the market is starting to do that, whether it's right or wrong, there's also the risk that you sort of price in the news now. So it's a, buy the rumor, sell the fact kind of situation, which gets complicated. But, that you're always going to have some out on the sort of speculative curve doing that. So if we're just going to sort of get back to the trends that you see, When you're talking about the Modern Family, is it their turn? Is that a rotation out of tech and into more of the sectors that are connected to the real economy? How do you see that working?
Yes, and of course, you can't really talk about that happening without bringing up the idea of rates, interest rates, because these are very interest rate sensitive areas, of course, small caps for sure, but everything, including the consumer, and we'll get into that, in a little bit. But absolutely, so there's a couple of things it's counting on. Number one, of course, is the soft landing. Did we actually have a soft landing? And right now, it certainly looks that way, but that could certainly be very ephemeral, as we know, because of all the things that are going on around the globe. But in terms of the interest rates, they have been more of a global easing. So rates are definitely going down. ECB lowered this week for the second time, and they were ahead of us the first time. So now maybe this market's also anticipating November cuts by the Fed, another 0.25%. So that's really where we have to keep our eyes on, number one. And number two, in terms of the growth, we've had very mixed manufacturing and industrial numbers this week. We had the Philly Fed strong, but we had housing starts weak. We've had unemployment and jobless claims, basically just sort of holding in a pattern. And so if the economy is going to truly grow, and we are 6 months ahead generally, that's how the market tends to work, then you have to say, well, what's going to be the reason? And the reason is probably going to be for the reason why we're here right now, which is a lot of government spending. And both parties are talking about that. What could prevent all of this from happening in any kind of real way is the debt, not just our debt, but obviously, and I know a lot of your guests talk about this, but the global debt, which hit, I think, 100 trillion this week. So then we have to bring into the next player in all of this. And of course, my favorite topic for how long now have we been talking, Maggie? Gold and silver, totally went crazy as we ended this week. So it's complicated. It's very complicated. And if you stop putting all this in your head, you can go nuts. So the best thing to do really is watch those ranges. That's kind of where I'm at. If XRT takes out 79.80 after 10 months of solid consolidation, I think you just have to jump in and know your risk, but say,
why would that be the one? Why would it be important for that you're watching that?
Because it's the consumer. And to me, the consumer is the thing that this economy needs more than anything, 70% of the GDP. But besides that, more than anything, as we're getting into a holiday season, confidence that inflation may not necessarily rear its ugly head, fear about this election. There's a lot of fear out there, not so much, well, I shouldn't say not so much, definitely fear of who's going to win. Obviously, we know we're very divided, but also fear that one candidate may not necessarily graciously leave if the other candidate wins. And I'm not picking on either one. I think there's issues on both sides. So the consumer is the base. It's the belly of this entire country right now. And if people continue to go out and spend, then we're going to be fine. And if they get fearful and they start cutting back, and we've certainly seen a lot of stores go by the wayside this year, or at least crash, then I think that it will be an issue. And then who's ever president, it doesn't matter, is going to have to think about how to get people to spend money again, how they're going to feel good. So that's kind of
and we know what the conclusion Washington usually comes to: throw money at them, right?
Exactly. Spend more money. Incentivize people to spend money. So and that's where and then it becomes like a vicious circle, really. So it's so interesting. But that's why I don't care if the retail sector breaks out. What it's telling me is that the consumers are maybe fed up with it all. We've talked YOLO, right? You only live once. They're just going, well, maybe the whole world's going to come to an end. World War III. People have been saying that. So heck, I almost said a bad word. Heck, I'm going to go out and spend money and just enjoy, because who knows if we'll even be here tomorrow.
No, there definitely seems to be a bit of that, but it's interesting. And J asking, what are your favorite charts tickers to watch right now? Oh, I think we're talking about one of them, J, and I'll get, we'll come back to that again to talk about some others. But XRT is the retail ETF. Right. That tracks consumer. One of the complicating things, Mish, with the consumer is that they've been saying they're unhappy, but they've been acting like they're fine. And part of it is the two-tier economy. for sure. Those at the lower end are more pinched by inflation. Those
Absolutely.
who have assets have seen the financial economy do well. But part of it, there may be some other interesting psychology around that too. So little hard to get a handle on what the consumer is doing. I guess that's why you like XRT, because if you follow the money more than what they're saying, say in a confidence survey, right?
Well, and XRT has both staples and also discretionary. So I think it's a good balance to see, like you say, two tiers. So, we're following obviously the people who actually have the money to spend more than the lower brackets. That's a whole other thing. And it doesn't really become a thing for the stock market or even the economy until it becomes a thing. But right now we're so far from that. So, and a lot of people, even lower bracket people, have one of the reasons why the bank earnings were so great was because from the investment arm, people are actually investing in terms of becoming retail investors, whether they're buying Bitcoin or other cryptocurrencies, or they're buying the e-minis. Or even the more fractional ones, Robinhood. Look what's happened to that stock, and Coinbase. So there is always going to be the most disjointed area of the economy, but that's not necessarily what drives the markets, as we know, or even the economic statistics.
Yeah. Speaking of savvy investors, it's nice to see everyone in the chat, and they have a lot of questions for you. So I'm gonna just get to some of them, and then we'll circle back to some other stuff. But so Boris is asking, says, "Hi, Mish. Great to see both of you." Thanks, Boris. Great to see you. Historically, the industrial sector has done very well after elections, regardless of the winner. Could this repeat again this time? This kind of harkens back, Boris, just at the top we were talking about perhaps a rotation out of tech to some other areas in Mish's modern family. What are you thinking about the industrial sector, Mish?
I think that's an absolutely great question, Boris, and probably very likely for a couple of reasons. One is, and again, when people keep asking me about the election and the differences in how I'm preparing, there are so many similarities that I think people forget about. And both of them are into this reshoring. Trump talks about doing it through tariffs, and Harris talks about doing it through incentives for companies to actually continue to do things in the U.S. And it's not like Trump hasn't done that, except that he talks about it just like a little bit differently, more penalizing. He's like the bad teacher as opposed to the good teacher kind of thing. If you do this, I'm going to penalize you. And she's more like, if you're going to do this, I'm going to reward you. But it all comes down to the same thing, which is they both really want to see more made in America, if you will. And that goes right to the industrial complex, not to mention, of course, defense spending, which I think they're both totally down with. So that's that. And then the other thing, interestingly enough, I love to not listen so much, but read Ryan Dietrich's comments, because he looks at things from a very different perspective. He's like the eternal optimist, if you will. But what he said lately is that statistically, well, two things. Statistically, after an election, regardless of who wins, we have a bull run. And secondly, after 2 years of a birthday of a bull market, it's very likely that we get a third, if not fourth, fifth, and sixth year run. And so that would all speak well. Growth just has to hang in there, but that would certainly speak well, not only for the modern family, but for the industrials.
Yeah. And that, right now the growth picture is looking good. You mentioned global liquidity. I'm going to flag for all of you. I had a really interesting conversation with David Rosenberg yesterday. Rosie, who, a lot of people refer to him as a perma bear. Well, that bear is a bit tamed. We had a really interesting, sort of very soul-searching conversation about how he's changing some of his views and what he's watching and what he's looking at in terms of the growth in the U.S. economy. Really, really interesting. That'll be coming out in the next few days, probably next week. So keep an eye out for that. But you're right, Mish. The growth picture is important. And right now, certainly when you look around the world, the U.S. is growing really strongly. But that fiscal spending, short term, that's the case. Longer term, does it raise some problems? That's some of the tension that we have to navigate through. Ryan asking, Mish, would love your thoughts on DXY, gold, and gold miners. Miners broke out today. What's your take?
Okay, well, I'll start with the dollar, okay? Because I knew that question was going to come up, so I decided I better look at a chart and have a fresh perspective in my head. And what's so amazing is that we all kind of knew, and I don't remember if it was you, Maggie, I spoke to, but recently it said that the dollar looked like it was very oversold down at around 100 and was probably ready for a bounce. Hence, we've gotten the bounce. So this 103, 103.50, I didn't think we were going to get back over 104, and we haven't. So the question of what happened next week, it got almost perfectly up to the 200-day moving average and the 6-month calendar range low. So that tells me right now that that could have been it. And if that's it, what does that mean, right? So we've seen gold and miners go up regardless of the dollar, regardless of the fact that the yields have firmed a little bit. So that really tells you that if the dollar starts to reverse, could it just chop around maybe between 100 and 103? Yeah, but one of my trifecta for keep your eye on inflation is if the dollar breaks 100. So I don't think the dollar is going much higher from here. I definitely think we kind of topped out this week, especially since it was somewhat of a flight to safety. And of course, geopolitics will come into that, but that's an unknown. And I do believe that it'll go back down. I just don't necessarily feel it's going to crash right now ahead of an election. So again, we could be ranging, but watch how that range breaks and then just follow it.
Yeah. What about gold and the miners?
Okay, miners, yeah. Well, classically, classically you see miners lead gold, but obviously in the last few years we've seen gold way outperform the miners and silver for that matter too. So now all of a sudden the miners starting to move up is an interesting scenario. Partly is because just gold keeps going up and up and up, and it's got to come from somewhere, number one. But number two is the miners and these hard assets, are necessary components, particularly copper, if we're looking at that. But just if you look this week, aluminum went up. Besides the copper, tin went up. I know China and iron ore has a relationship there, and so China's kind of been all over the map here. But those miners now are starting to look more and more interesting. And yes, it was a breakout. This 40 level in GDX was huge. I think we closed close to 42 today. So that looks to me amazing. If we look at gold, 2,700 was a first target for many people, and we got through that today. So do I think gold's going to 3,000? I thought if you talked to me 2 years ago, I thought gold was going to 3,000. People thought I was nuts. Me and Peter Schiff were like the nutty people.
The gold bugs. People hate that term who like gold too. So my apologies, but
right. But what's really even more interesting, just to finalize the last piece of that question right now, to me, is silver for two reasons. One is silver just broke out of a decade-long place, 32.50. I was like 2,100 with gold, just like hold your nose, jump in and buy. I kind of feel that same way about silver. It could go to $50. And then you have to watch the relationship of silver to gold. Because again, I don't care what anybody says. If we see the dollar go down and we see the silver start to outperform the gold, whether sugar cooperates or not, because that's my third in the trifecta, we're looking at some issues from an inflation standpoint that may not necessarily reflect in CPI.
Yeah. Wait, okay. This is super important. So going back to J&J, who said, what are you watching? So this is the inflation warning system that may be more accurate and forward looking than CPI, which, we know a lot of the data lags. So walk us through what it is again. It is silver,
threefold.
the dollar.
It's the dollar. If the dollar, right now we already know that the dollar's purchasing power has really been cut. So if it breaks down under 100, we know the potential reasons. Obviously, inflation would be one, but that would not be good. That would be very inflationary. It might be even perceived initially as good for some of the sectors because, cheaper dollar in terms of other countries importing our stuff. But we have to have more stuff to import. One of the biggest things that we have export. One of the biggest things we've exported is oil. And don't let me forget to come back to the question, but I just want to say this is very important about the oil market here, because this is exactly how you cannot anticipate what a candidate is necessarily going to be able to do once they're president. So everybody thought Biden was all green energy and oil and gas was going to be dead. And, there's been a big move in drill, baby, drill, drill, baby, drill. Meanwhile, we've become one of the largest exporting countries of oil. And it's one of the reasons why oil is down so much. And green energy has gotten killed. And let's circle back to that later. But it just goes to show you that, people would think, oh, Trump would support oil and Biden would support green energy. Meanwhile, Trump is all buddy-buddy with Musk, which makes me wonder whether he's just, kind of pandering to a base by saying drill, baby, drill, because that's the last thing Musk wants, right? Musk is all about clean energy, alternative energy. So anyway.
Yeah, really, really good point. We always, especially for anyone who's listening overseas, you really have to separate out campaign rhetoric from policy, and then the hopes and dreams when you get to Washington, and then when you're actually able to do and what you push through are often very, very different.
Right. So I'm actually going to be amazed at my brain cells here that I actually remember the questions.
Yeah, I know. Wait, I'm just going to say, aside from I'm just going to say Mish has been killing it all week. She's had a really busy week. And I know that everybody who's in the chat really respects this because they can throw you any question and you literally start talking about levels and everything without anything in front of you. It's just absolutely extraordinary. So the fact that you're still doing that on a Friday afternoon for us is amazing, Mish. So, but yes, we are going to.
The question was the trifecta of inflation, right?
Before we talk about the points, just lay out that trifecta for me.
Right. So we said the dollar was one, silver outperforming gold is the other. And we've had these little blips where silver starts to outperform, but it has not been sustained. Going back to the late 70s, that was definitely a factor. Silver outperformed gold. Now think about it. Gold is trading 27.30 right now. Silver got up to 33 something. So the ratio is maybe flipping a little bit because gold may not necessarily go up in leaps and bounds, but yet silver can. So you want to watch for that. You want to watch the dollar. And the third thing is my little sugar barometer trade. So in 1979, sugar went up with the gold and the silver. And it floundered for a long time. And then all of a sudden it went up from 6 cents a pound to 45 cents a pound. And now it had gone back down to 4 or 5 cents before COVID. Of course, now it's at 22 cents a pound. So it's starting from a higher level. Hasn't done anything yet. But I call that an inflation barometer because it really reflects not only civil unrest, people reaching for things that are more comfort food, but it could also even mean we got La Nina starting here. I mean, who the heck knows what could happen weather-wise with some of the sugar crops. So that's why I kind of throw that in there too, because it's a psychological soother, but it also can be, sort of an interesting export, especially if people start to hoard it and don't want to export.
Yeah, gosh, sugars and everything too. Barish is just saying that Mish is really one of the best. Just pass this compliment on to her, and I will because it's true. But that's a really fantastic because one of the problems we've had with the whole inflation debate, which is of course key to what happens to the Fed, key to what happens to Treasury rates. The follow through to that is all of our borrowing rates.
Exactly.
Is that the inflation picture has been confusing and or delayed. And so the reaction function has been a little tricky to weave out. I want to get to a couple of other of these questions, and you can really pass, Mish, if you're not watching because they are all over the place.
Okay,
and you are only human, but okay. So let's go. I'm trying to go in line. By the way, I heard we are live, folks. So roll up and ask your questions when you join our shows, which you're all doing today, but someone's hearing some noise. Mish and I are not hearing it. This has been a weird thing happening. So if you are hearing some crackling, we apologize. We have no idea where it's coming from, but we're going to hunt it down. So let's see. Okay. No One Knows Thyself is asking, do you have your bearings on uranium? So many tech AI companies are investing into nuclear energy. I think there was an announcement I saw from Google this week about the big Microsoft one. Also, Trump is a proponent of low-cost nuclear energy. Is this a commodity that's poised for a run? There's been a lot going on in uranium, though.
And I think, again, I feel like somehow through the years, you and I have talked about uranium, and I have mentioned to you that, there are just some symbols that even if you're 100% right, you can't seem to trade them well. And for me, totally honest, uranium is one of them. I got long uranium, and we talked about, actually, you know what? I do remember, Maggie, you and I talked about this. It might have been when you were still over at RV, that once it broke out over $28 uranium, URA was a buy, right? And so I'm like, okay, then why aren't I buying it? And I bought it. This is just a little bit of a little story here, just to let you know that I am human. It went down to like 24, and I was like, oh, darn it. And I just got out. I took my loss and I got out. And now it's what, at 32, 33, something like that. Now, it's still not that far from 28, interestingly enough. So the question, now I will answer the question, is what happens from here? And this is such a classic type of situation where an announcement is made that we're looking into nuclear energy, and then it's going to be from the announcement to the reality, how many things happen in between, things that help it and things that harm it. And we do know that there is bad memories of nuclear energy. Now, cleaning up after it is one of the biggest things. I live in New Mexico, where you have the Los Alamos labs here, and that is the biggest problem that people talk about, is dumping all this stuff. So what I'm really saying is not that I'm not pro nuclear energy, clean energy. It would be awesome. But I don't know if I necessarily think that uranium is on this just major trajectory. It's kind of happened now. So to me, I don't know if I would be chasing it here. And this could be, that's why I gave you the background. This could be just because I'm just not the best uranium trader.
Yeah, well, Mish, if it gives you any comfort, I've had more conversations about uranium than I would have guessed if you'd asked me a few years ago. But there's a lot of speculators. I think Jared Dillian summed it up. He said there's a lot of assholes in uranium. So there's a lot of people who are sort of jumping on the headline train. But it is also, I would tell you that if you're interested in doing it, really go do your homework. It is one of the hardest commodities to trade. It doesn't trade like other commodities. Price discovery is really, really not very transparent. And there are some peculiarities about this that make it really difficult. And so, Mish, it's not a surprise that, I wouldn't say it's like any of the other commodities. I'll bore you with more of what I know from really smart people who do it. But I will also flag, folks, now that we bring it up, let me flip around here. I don't have it all in my head. Rick Rule is coming on in that. This is somebody who knows a lot about uranium because he's done it from the sort of, he's coming on November 4th. So roll up, you can bring all your uranium questions to Rick and he will be happy to answer them. But Mish, your gut is always spot on. Want to get a little bit on Bitcoin. Someone has a question. I don't know if you're watching SWE, but have you seen 12-month chart of SWE Bitcoin, the only crypto outperforming Bitcoin on both short and long time frames? Not sure if you're watching that protocol, but you certainly give us your thought on Bitcoin.
Well, I have a Coinbase account. I trade my own wallet, and I get alerts. So I've seen the alerts. SWE is now up, blah 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 blah. But I haven't actually physically traded it, and I haven't actually looked at a chart because I'm watching. I trade Chainlink, Dogecoin, Solana, Bitcoin, XRP. And I've even traded sushi and Near. So that one hasn't quite made my list yet, but I'm going to go look at it now. So, yeah, but by the way, my little trick, and it's so simple. I almost can't believe it myself, how well this works, is watch the volume bars on any of the coins you want to trade. And if you have a red bar that's an accumulation, which means the red bar is higher than the green bar the day before, which means actually it's not an accumulation, it's a distribution, means money is coming out, don't buy that. But as soon as you see a green bar get bigger than the red bar from the days before, that's accumulation, that's inflow. And sometimes that's all the signal you need. I mean, it's like crazy. I saw that in Dogecoin earlier this week when Doge was down at around 10.50, 11, and I saw it was like up at 13 now. When I say 13, it could be, is it 13 or 1.3? I mean, this is where my brain is going to be a little edgy without looking at a chart. All I can tell you is that's a good tip. Now, Bitcoin, the most interesting thing about Bitcoin. So I decided to go back just because I've been looking at weekly charts for the last 10 months on all the Modern family, and, crypto's in my family. And I saw that in February, the low was 41,000. By mid-March, the high was about just shy of 74,000. That was all done within a 2-week period, end of February, middle of March. Since then, we have not violated that low or violated that high. So for 10 months or just about 9 months, we've been in a range. It's the same exact thing we were talking about with retail and transportation and Grandpa Russell. We're in a range. Now, are we getting to the top of the range? Yeah. Seasonally, October is supposed to be a very strong month for cryptocurrency. We're still, what's today, the 17th? We still got a couple of weeks left. I love blockchain and MicroStrategy and some of those other things that have been really fun to play. But until we take out that 74, I don't really know if I can say we're going to go make new highs.
Interesting. We're going to close out with something, and it may be that you're just waiting because I know you're very tactical, especially if we're talking about short term. I just want to mention Christopher, hi Christopher, is saying, and he's so right, nuclear's an old story. Well, from a trading perspective, right. Nuclear is an old story. SMR has gone from 185 to 20 this year. And now retail, meaning retail investors are excited, have to buy the uranium complex when it cools off, which is some sage advice because there has been activity. I think that harkens back to Jarrett's comments about a lot of a-holes in the trade.
And a lot fewer words than what I said it in.
Yeah, well, no, but you gave an explanation that even when you're getting involved, be careful because it's not as straightforward, and that's also really important. So thank you for that, Christopher. So Mish, as you look here, through the next few weeks with all of the uncertainty out there, is there anything that you like that you feel convicted enough about that you want to be trading, or are you on the sidelines waiting to pick your levels?
Well, I have my themes, and I know it's a little bit of a dumpster diving, but I don't mind probing at these levels because the selling has so dried up, even if the price hasn't moved up. In solar energy, I mean, we mentioned it earlier. Now, TAN just broke down, but I think it closed back over where it needed to at like 37, 33 or something. This is because everybody's now talking about nuclear energy and oil is way down. Did solar energy go away? No, it didn't go away. It's still very much a thing. And I just feel like that's something that I wouldn't mind probing. I've talked a lot about the vanity trade, and some of those stocks have just been really beaten up, even though Eli Lilly is still very strong. It's come off. Novo Nordisk has come off. Elf Beauty has come off. Ulta Beauty has come off. Match.com, by the way, actually looks like it could go up. Start thinking about this new consumer that's going to hit the market, which could help granny retail, by the way.
The new skinny consumer. This is Mish's thesis.
This is it. To me, if there's one place that the consumer is going to go, it's going to be all of a sudden a huge percentage of people who stayed out of anything to do with dating or beauty or skincare or makeup because they didn't feel good about themselves, and now they do. So that's really the two areas: is the solar and the vanity trade.
The Ozempic halo, although that's not the only one. Mish, this has been so fantastic. It's incredible the amount of area that we're able to cover, and I love your dumpster dives. They are ones to watch for sure, but I love that you're willing to go there with us. We appreciate it.
Well, thank you, Maggie. And thank you for all those great questions today. It was awesome.
Yes, the chat was on fire. You are all the best, but they know that they can roll up and ask them of you. So that's why they're here. So have a fantastic weekend. I know you're off to some well-deserved sake. So cheers from all of us, Mish.
Well, thank you so much. I look forward to seeing you again. And thank you all. Have a wonderful weekend.
Yeah, have a great weekend, everyone. We'll be back on Monday. Take care and good luck out there.